bespoke financial which provide bespoke financial services to various categories of individuals, regardless, and organizations, regardless of their appetites. We are publicly listed on the Nigerian Stock Exchange, and our purpose for existence is to transform the African continent by providing innovative investment banking solutions to all sectors and individuals. So I guess we can kickstart this session by giving a brief introduction as well of the panelists. I have two of my very able colleagues. First of all is Ore Ajayi. Ore is the head of digital and retail sales in our asset management business. He's a financial and investment enthusiast who's quite keen on leveraging sustainable investments for wealth creations for individuals. You're welcome to the session, to the masterclass, Ore. Okay, I'll go ahead to introduce Ayorinde Akinloye. Okay, we can hear you. Ayorinde is our team member of our research department. He's an equity research analyst, and he has demonstrated a wide history of working in the financial services industry. You're welcome, Ayorinde.
Thank you for having me.
Perfect. So I'll just jump straight to the first question. The first question would be, what exactly are your thoughts? And this question I'll pose to both yourself, or you could go first, and then Ayorinde. What your thoughts are on the current state of the Nigerian Naira, especially with the recent PMC decisions. So, Ore, please go first and let us know what your thoughts are on our currency, our Naira currency.
Thank you very much, Gbemi. So I think the first thing I'd like to say is, please don't panic. When we put up this post yesterday and a couple of days before, I had a lot of clients reach out to me. All of them were panicking as regards what the situation was, what they should do next, whether they should buy their dollars or sell dollars at this time. So I think the first point is, please don't panic. The implications of this for me personally is, of course, we would see a rise in the dollar, especially in the parallel market. And what this does to investors is, of course, it reduces your purchasing power as regards, commodities that you want to buy in Nigeria, since Nigeria is an import-dependent country as a whole. But given the fact that the CBN and the government is ready to make provision for certain needs, so if you're someone that has a purpose, if you want to travel, then you can get this at a cheaper rate officially, right? If you need it for your PTA, you can get that officially as well. If you have medical expenses or you're trying to pay your child's school fees abroad. So if you fall into any of those categories, it's essential that you do not panic and you just go to the right channels that have been provided by the CBN, which is, walking into any bank and, leveraging their FX desk. However, if you're looking to do things that are not within that spectrum, then you have to start thinking, how much do I need? How soon do I need to get it? And what are the expectations for this? My colleague Ayo would really touch on more on the expectations as regards what the dollar would be. However, I think it's very essential that you plan as regards what your purpose is and stay within that confine. But if you have those needs beyond that, then of course, it will be a good time for you to secure some FX if you can. Because my own personal expectation is that, it's definitely going to go high and you will see a disparity between the parallel market and the official market. So for me personally, do not panic, identify the purpose you need it for, and essentially then begin to purchase for your essential needs. Thank you.
Okay, thank you very much, Ore. We'll try not to panic as we try to gather as much FX as we can. But Ayo, please, we'd like to hear from you what your thoughts are and what your personal thought is, especially with regards to the Naira.
Okay, thank you very much. So quickly, just on that, in terms of what we are looking at regarding decision by the CBN to basically stop sales of FX to BDCs, clearly our first expectation is the fact that we will definitely see a spike in exchange rates at the parallel markets. So you would expect to see the margins between the parallel markets and the official channels. You expect to see a wider growth in that sense. So, but when you look at the decision by the CBN holistically, you will discover that it's most likely going to lead to people who used to go to the parallel markets before. They would now have access to buying dollars from the official channels, because what the CBN is doing is, instead of selling dollars to the BDCs, because they typically sell about $100 to $200 million to them every week. So instead of selling to them, I'll sell to the banks, and then people used to go to the BDCs or the parallel markets before. You can go to the banks. So basically, what that entails is, over time, there will be some sort of a sort of return to reality in the parallel markets, where, yes, that, which was why Ore was saying we should not panic. Yes, we might see that jump initially, but we would later begin to see it sort of simmer down a bit, so that the parallel markets would now begin to see a reduction in demand, because people can now get dollars from the banks. Like Ore mentioned, if you need you need to travel, you need to pay for bills abroad and things like that, you can easily go to the banks, and the documentation process has been much more simplified for people to access. So yes, we will definitely see that jump, which we have seen at the parallel market. The following day, the Naira lost. Dollar went to about 525, but as of yesterday, it came down to about 517. So that's to mention the fact that yes, that spike will be there, but over time we definitely see a sort of simmer down or a cool down in the exchange rates at the parallel market.
Okay, thank you very much, Ayorinde. Before I go to the next question, which I would also pose to you, Ayo, I'll just ask that if we have any of the attendees, if we have any questions that we want to ask based on any of the questions that are being asked, please drop them in the chat box, and then we'll take them at intervals. Thank you. So Ayo, I know you've told us what your individual thought is about the Naira, the need not to panic, but what are your projections, or what do you expect in the next, 1 year or so, over time? I know you said the Naira was 525 yesterday, and that based on the initial rush, we started even seeing a decline. But what do you think your projections are in the next 1 year?
Okay, thank you, Gbemi. So quickly, at this point, it's important to let everyone know that the foreign exchange market, particularly for Nigeria, it's a bit segmented. So we should look at it from the perspective of two different markets. So there is the official market, where the CBN intervenes and you can get dollars from the banks, and then there's the parallel market, BDCs and all. So speaking from the perspective of the official markets, the Naira currently is at about 411, but we clearly, for us, the fair value of the Naira is somewhere around 430. So we anticipate the fact that the CBN would at some point over the next 6 to 9 months devalue the Naira further. So from the current 411, we expect it to be devalued further to at least, say, 430, 440 over the next 6 to 9 months. That's our projections based on our model for valuing the Naira, in-house in United Capital. And unsurprisingly, when the CBN governor was at a conference about a month ago, thereabouts, he also alluded to the fact that, at the CBN, they know that the Naira at 411 is not the true value of the Naira. It's, it's too expensive. It's not, Naira at, the dollar at 411, sorry, it's not the true value. It should be around 440. So with the CBN governor alluding to that, then we can also expect that they are most likely going to consider a devaluation at some point, maybe over the next 6 to 9 months. So we definitely would expect to see the Naira weaken, over the next 6 to 9 months. And then you also look at the fact that, the Naira definitely has a higher inflation rate and a higher interest rate relative to the dollar. And typically, from theoretical economics, you would say that such currencies tend to depreciate over time. And that has been the history of the Naira. So definitely we expect to see some sort of weakness on that front. But on the parallel market, for the parallel market, it's a different market entirely. Yes, the knee-jerk reaction to the CBN's decision has pushed the rates higher. But we expect that, over the next few weeks or few months, then we expect to see some sort of normalization on that front. Thank you.
Okay, thanks a lot, Ayo. So you've mentioned devaluation a couple of times, in answering this last question. What would you say is really the impact of this devaluation on the average local investor? I know the impact of devaluation on, on my everyday spending. I mean, things are ridiculously expensive now. But if you would please let us know what's the impact of the devaluation of the Naira on your average local investor.
Okay, so basically, in terms of the impact of devaluation, first, just to clarify what devaluation means, in case it's not so clear what you're trying to say. Devaluation basically means loss of value of the Naira. Basically, that's what devaluation is saying. Now, means once the Naira is losing value, what that means is for us that we earn in Naira, our ability to buy goods and services or to pay for goods and services is declining. So I just to give a perspective to that. So most of the goods that we consume in Nigeria are imported. You want to buy clothes, you want to buy, even for some of the items that are produced in Nigeria, the raw materials are imported. About 2 days ago, I was speaking with a company, one of the companies that produce sugar, golden penny sugar that we all consume and buy from supermarkets. They complained that the cost of importing raw sugar that they used to produce their own cubes and everything here has increased by over 25%. And then with the devaluation of the Naira, that is the Naira losing value, it's becoming more expensive for them to produce sugar. So what that means is they most likely would consider even increasing prices over the next couple of months or so, just to respond to that increase in their cost. So what devaluation basically does is it increases the cost of living for Nigerians, because all what we consume, virtually all what we consume, all have their ties to imported materials, basically. So that's basically the implication for the average Nigerian or the average Nigerian consumer.
Okay, thank you very much, Ayo. Ore, I'd like for you to also share your thoughts, please, on what you think the impact of the devaluation on the Naira the impact it's had on our local investors.
Right. I mean, I touched on this as well. I think the number one impact will be inflation. We'll definitely see inflation go higher. And what that means for the average investor is, even though you're investing at the moment, right, what that means is going to reduce your purchasing power. But one thing I'd like to note is, regardless of the situation, it's very essential that you still remain or you still keep investing, because you sometimes would see that there will be some investor apathy, in the sense that they would say, hey, inflation is high, things are really difficult. I can't get an investment that would match, the inflation levels in the country. I'd rather not invest. But it's still very essential that you still keep investing to ensure that at least you're competing with inflation to a certain extent. So if you look at even some of the local investments that you have available, such as, let's say, money market funds. Let's take, for example, the United Capital Money Market Fund, which is doing on the average about 10%, which is very, very competitive. But you look at inflation and say, hey, inflation is above 17%. How do I compete? You're still having that 7% negative return. However, if you didn't invest at all, you would have a 17% negative return as a whole. So it's very essential you have that mindset, regardless of the inflation, regardless of cost of things going higher here and there. It's essential that you still try to compete with whatever assets you have. But most importantly, which we'll still touch on during the course of this discussion, is that you begin to have the mindset of hedging this risk. It's very essential that you start hedging with dollar-denominated assets, so that when next there's a devaluation and these things come up from time to time, you're in a better position. Thank you.
Thank you, Ore. I mean, you've told us now that our purchasing power of having the Naira has dropped, and that we should look at more dollar-denominated instruments. So I think we should discuss the dollar-denominated investments. What role can they play in hedging against this devaluation? If you can just go a bit further, and I think I'll pose this question to Ayo. If you can let us know what role these dollar-denominated investments play in hedging the devaluation of the Naira. Ayorinde, over to you, please.
Okay, thank you. So quickly, in terms of dollar-denominated investment, so as an investor, you have, for example, maybe you want to hedge your dollar risk or devaluation risk, basically, which is probably the best approach in terms of hedging anything that's to do with devaluation, because if the Naira gets devalued, you are already safe by holding dollars, basically. So, but in terms of how do you do that, one of the ways you can do that, for example, which is quite common and it's actually the wrong way of hedging, is most people just go buy hard dollars and leave in their domiciliary accounts, and then they probably get next to nothing interest rates on that deposits that they've made with the banks. But another option is for you to invest in dollar-denominated assets. So rather than just keep the dollars in your bank account and leave it there, yielding no interest, little to nothing, on that deposit, you can take that money and put in a dollar-denominated investment. Now, as an investor, what advantage do you get, for what advantage do you get by investing in dollar-denominated assets? I just create a scenario. Imagine about 10 years ago when Naira was about 150 or 160 to the dollar. If you had invested $1,000 maybe in an Eurobond fund that is giving you even say 5% every year, what you know is over that 15 years, you would have made a decent return. And you look at the fact that Naira has been devalued from about 150 to, in the official market is now 410, in the parallel market is 525 or something. So on the interest side, you're gaining significantly. On the devaluation side, you're also gaining significantly. So it's much better for you to earn interest on your dollar, on the dollars you have, than for you to leave it in just leaving it in maybe your bank account where you're getting little to nothing. So the reason why dollar-denominated investments are better, is basically because they give you additional return. So you invest $1,000 today or $100 today, or no matter how small, you know that you are definitely going to get an interest or a return on that investment every year, and you are also hedging against your that devaluation risk. So it's basically a two-way advantage. You're using one stone to kill two birds, basically. So you are earning interest, and at the same time, you're also hedging against devaluation, rather than just hedging against devaluation by buying dollars from the parallel markets and keeping it in your bank.
Wow, thank you, Ayo. In fact, I've learned a lot now. So in order to hedge against the devaluation of the Naira, it's advisable that we invest in dollar-denominated instruments, which would not only help us hedge against the devaluation, but also earn some returns on the investments. In a nutshell, that's what you just said, right? Perfect.
Yes, definitely.
Thank you. So my next question now, and Ore, I'd like for you to take this question. What other benefits do you think are attributable, pardon me, what other benefits do you think are attributable to having a dollar-denominated instrument or investment in your portfolio? Apart from probably the interest that you yield or that we get, what else do you think we would benefit from having a dollar-denominated instrument?
Thank you, Gbemi. Just to add to what I mentioned earlier, I think one of the most important things is stability. As an investor, what most investors look for is something that is going to stay stable over next coming years and year on year, that you're sure it's going to remain or retain its value. So I think stability is very key. Take, for example, if you have, let's say, an endowment fund or an heritage trust, something that you're keeping for maybe, say, your kids, for the next generation, you're very concerned with what the value is going to be 10, 20 years down the line. And these are conversations that, we tend to have with some of our investors. This is one of the, main concerns. What would I be able to hand over to the next generation, which is very, very essential when you're making investment. You want to pass down that value to the next generation. And you're concerned, if your kids eventually move to other countries in the US and they want to now convert that Naira value 20, 30 years down the line, it might not mean so much to them then, just because that value was not preserved. And of course, the currency wasn't stable through that duration. So I think stability is very key for most investors. Then another thing that you also would consider is, as I also mentioned as well, which is pretty much the FX gain. So regardless of the interest you're making on your investment, another thing to consider is, because the currency is not stable and the dollar keeps gaining against the Naira, you're sure that over a duration of time, you also will be able to book in some FX gain. And if you look at the trend of what has happened over the last year, right, what people are booking in their FX gain alone, is somewhere within the region, let's say 30, 40%, which will probably even exceed the returns they were getting on the investment they made itself. So that's why it's very strategic as an investor. If you're looking for stability, if you're looking for capital preservation, and of course, if you're looking for competitive returns, it's very essential that you start thinking the dollar way as well. Thank you.
All right, thank you very much, Ore. So in addition to whatever returns we get on the investments, we are saying that there's stability, growth, as well as leaving a legacy that we can leave on to others. Thank you very much. So at this point, I'll just let everyone know that we can see your questions. Please keep them coming in. After the session, we'll take each and every one of them one by one. So Ayo, this question is for you. What would you say are the factors that we should consider as an individual, as a lay person, a layman, or an investor? What factors should we consider when deciding on a dollar-denominated assets to invest in, as opposed to, compared to any Naira assets?
Okay, so quickly, is first thing you have to look at how much, the value in terms of how much you want to invest. That's the first thing, because it's going to be very important in deciding what kind of investment you can access. So for example, because there are different types of dollar-denominated assets you can invest in, right? And for some, they have certain minimum requirements for you to be able to, in terms of minimum amounts that you can invest. So first thing you have to look at is, how much do I have to invest? So that would go a long way in helping you to determine what type of instruments you would invest in. But you can be rest assured that on this platform, there is a bucket for everybody. So with United Capital, we have created buckets for everybody. If you have $200,000, $1 million, $100, $1,000, there's a bucket for everybody. So don't be worried about minimum deposits or things like that. There's a bucket for everybody. Number two, you also have to look at what period are you looking, what's the investment horizon and the reason for making that investment. So for example, for maybe some parents, they rather want to maybe invest in dollars, basically for their kids, for the future. Or maybe they have the ambition of sending their kids abroad for their education, but they know that, the child is still maybe in primary school now and won't be going to uni for another 10, 12 years. But in another 10, 12 years, Naira to dollar may be, just, throwing out a figure there, ballpark figure, maybe 1,000 Naira to $1 by that time. I mean, 10 years ago, it was 150, now it's 500. So, you never can tell what it will be by then. So one of the things that you also have to look at is why you want to make that investment. So if you're committing those funds basically for a future purpose of maybe that would not materialize for another maybe 10 years, then you know that, okay, I can do a long tenure sort of dollar-denominated investment, or if you want to do a shorter tenure kind of investment. So because some of the dollar-denominated investments require you they have longer tenures, although yes, you can always sell where you need to sell if you need the funds, which is another advantage of dollar-denominated assets. It's a very liquid market. So it's not like, you're investing for 10 years and then 1 year later you need the funds urgently for an emergency or something like that, and you don't have access to it. You can easily sell and then you get your funds for you to be able to do, for you to be able to take care of that. And then we'll even speak to other advantages that you get with United Capital, when such emergencies come up, maybe later in this session. But in terms of what you should consider, summarizing everything, you need to look at first, you need to look at, the tenure and why you want to invest. Then you also need to look at in terms of the need, in terms of the need where you need that investment for later on. Then you also need to look at your minimum amounts, like how much do you have to invest. Those are different factors that you need to consider when you're taking that decision, in investing in dollar-denominated assets. How long do you want to invest for? Why do you want to invest in that asset? And then what's the minimum amount, or what's the amount you have? But be rest assured, like we mentioned, that there is a bucket for everybody, regardless of how much you have to invest.
Okay, thank you. Thank you very much for that, Ayo. I'd like for you to answer the next question, which is also a follow-on on the previous one. Regarding the Eurobond fund, what would you say sets it apart from other foreign funds, such as perhaps a US bond or any other foreign funds that are available? What would you say is the differentiating factor?
Okay, I think the headline difference is definitely interest rates. in a US bond, for example, there's hardly any dollar-denominated investments that will give you a higher return than maybe an Eurobond investment or an Eurobond mutual fund investment. And I would explain why. Because the dollar is a strong currency, interest rates tied to dollar currencies or dollar investments are typically lower. So if you go to the US and maybe you have, say, $10 million, for example, so you can adequately invest in a US bond, you have maybe up to the minimum amount required, and you want to buy maybe a US Treasury investment, or maybe a US company, maybe, for example, you want to buy a bond issued by Google or Apple, you go there and then you see the interest rate is 0.5% or 1% per annum. That is quite low when you compare to, Eurobonds. Eurobond investment should typically give you, at least on an Eurobond investment, you get roughly, say, 6-7%, 5% at the minimum, on your investments. So interest rates on dollar-denominated assets generally are typically low, but when you compare to Eurobonds, they are always higher. And you might want to ask, why is the interest rate on Eurobonds higher? Because, you typically hear higher return, higher risk. The reason why interest rate on Eurobonds are typically higher is because they are usually issued by countries that, are not necessarily, their bread and butter is not, dollars, basically. So Nigerian governments, typically issue Eurobonds, for example. Kenyan government will issue Eurobonds. GT Bank will issue Eurobonds. They earn in Naira, but they want to raise in dollars, because they also do borrowings. They also borrow to foreign companies too, who want to borrow in dollars, or Nigerian companies who want to borrow in dollars also. So that's why you tend to get higher interest rates on, Eurobonds relative to other dollar-denominated assets. So I think that's the main highlight, in terms of comparing the two, and which is why we are saying, as a Nigerian investor, Eurobonds or Eurobond mutual funds are typically the best option if you want to expose yourself to the dollar.
Okay, thank you very much, Ayo. So we know now that the major differentiating factor between the dollar bond and the euro bond is the interest rate, primarily the interest rate. Thank you. So Ore, this question goes to you. How can, and this also answers some of the questions I've seen in the chat box. How can one invest in the United Capital Euro Bond Fund? And what's the minimum investable amount? Do I need a middleman to invest? How do I fund my account? Those kind of questions, those kind of things. Can you advise us on what the fund is and the minimum investable amount that I can invest?
All right, thank you, Gbemi. So I think I'll touch on what the fund is first. So just provide clarity for prospective investors that are not existing with us. So the Eurobond Fund is a dollar-denominated mutual fund, which offers our investors the opportunity to invest with as little as $1,000 and also get competitive returns from the Eurobond market space. Essentially, we make investments in Eurobonds, as Ayo mentioned earlier. So we focus on FGN-issued Eurobonds, as well as those issued by top-tier corporates. The beauty of the fund, as with other mutual funds, is the fact that it's a collective investment. And what that means for you essentially is, as opposed to you as an individual trying to make a dollar-based investment alone, you then go into a collective investment scheme, which is a mutual fund. And the benefit of this is, first of all, the bargaining power and the liquidity as well. And so when I speak of bargaining power, let me give you a typical example. If you had, let's say, $1,000 or let's say $10,000 in your domiciliary account, the interest you would get is almost next to nothing, very little, right? As compared to if you then put it into this bucket with this mutual fund, right, that is in excess of $100 million. And we also make those kind of placements with those type of institutions or buy certain instruments, we will definitely get something way higher than what you would have gotten ordinarily, right? We might get something within the regions of, let's say, 4-5%. So that increases the bargaining power. As opposed to you, let's say, getting 1%, you're getting 5, you're getting 6, right? The other thing is also you being able to diversify your risk, being able to spread it across various instruments. As I mentioned, we invest in FGN-issued Eurobonds as well as that of top-tier corporates, although majority of it is in the FGN bonds, right, Eurobonds. So you get to have that diversified asset class across, private, public, and different tenors, right? And also the kind of returns you get being cut across different risk categories, you get something significantly higher than you would have gotten, going into this sort of investment on your own. Now, to get started with this sort of investment, how do you start? The first thing is you will need to open an account with United Capital. Opening your account has been made very easy now. It's as easy as Invest Now. So what you would then need to do is simply download the Invest Now app from your various app stores, or you could just visit investnow.ng and select the Eurobond fund and fill out the required KYC. So what will be required from you is just your basic information. Then, of course, you will then need to provide a valid means of ID, a recent utility bill as well, then attach your passport photograph as well. As soon as that process is concluded, of course, we would then get in touch with you to let you know your account has been opened. You would provided an online access to Invest Now, which will enable you to track your investments, see what the returns are, see what other investment opportunities are available to you as well. Then the next step, which is a very critical step in investing in our mutual fund, our Eurobond fund, is funding. Now, funding the investment is solely by transfer. We only accept inflows and we do not accept cash deposits. And this is majorly because of the CBN policies as regards moving cash deposits across banks within the country. So it's very difficult for you, if you have cash, to move it around. So we only accept inflows. Now, I see a lot of questions, in the chat room as regards, people having cash and they want to invest. It's very difficult for us to accept cash into that account. However, we're more than willing to engage you personally to see how we can help with the dynamics within the banks and advise which bank to go to, what process is, what's the maximum you can transfer per unit time. Because we do notice that a number of these banks do tend to send some of these cash deposits, but just with a maximum limit. So for some banks, they might tell you, oh, you have a maximum limit of $1,000 per week, some $10,000 per month. It varies across the bank. So it's just you liaising with your own bank to understand the peculiarities of their own arrangement so that you can be able to transfer the funds eventually to us. However, most critically, if you're someone that has inflow already in your account, you would not face this challenge and you can easily move the funds to us. And if you're in diaspora, like most of our clients do, it's very easy for you to move the funds from the US. If you're in the UK as well, there's a system whereby you can move your pounds and it's automatically converted into USD on your behalf by your own bank there in the UK as well. So there are different ways around moving the funds to us. And if you're someone that has Naira and you're looking to convert into dollars as well, we're also open to help navigate that process as well with you, introducing you to the respective counterparties, providing swap options. As much as possible, we just try to make sure that the investment process is very seamless and is very easy for you to be able to participate in such investments, being that it's very critical at this time for you to have this important edge being in the Eurobond fund.
All right. Thank you very much. That was jam-packed. And I think also in answering some of the questions I've seen as well, inflow just basically means the transfer from your account into the account of United Capital. We don't accept cash payments, obviously because of money laundering policies and all that. So thank you very much, Ore. But you didn't mention though, I think you should also please provide some clarity on if there's any need for any middleman. Do I need to go through someone before getting to United Capital, or how? I mean, you've talked about the Invest Now, just downloading the app, but is there any need for a middleman anywhere in the process?
No, you do not need a middleman. Investment has been made very easy and most importantly, very transparent. It's very essential that you go directly to the source when you're making an investment and also do your due diligence so you don't fall a victim to any of these scammers online. So coming to United Capital is very, very straightforward. You have to go to our official channels, but I think the easiest platform for you to be able to reach us directly will be via Invest Now, which is our digital platform, which allows you to invest in real time on the go and of course be able to track your investments as well. So I don't think you need any, you don't need any middleman. I think the only middleman is the online platform, which is Invest Now, which will be able to interact with you and guide you through the various steps to actually invest. However, we do have some strategic partnerships, but if you're on this webinar, that means you can engage us directly to make this investment. Thank you.
Okay. Thank you very much, Ore. And my next question, which I think you've answered, but I'll still ask it in case there's more light you want to throw in there, is if the Eurobond Fund, the United Capital Eurobond Fund, is targeted solely at Nigerians in Nigeria, or people who, or even people in diaspora, or people who earn in foreign denominations. If you can just shed a bit more light there.
All right, thank you for that question. It's something that I really wanted to touch on as well. You know, in the past, I would have said things like, oh, this is very essential for people that have dollar-denominated obligations. But given what is really happening with the FX market, it's now imperative that everyone begins to hedge, regardless of just the obligation. You might not have the obligation now, but you might have the obligation in the nearest future. So this fund cuts across everyone's needs, right? So if you're, you know, looking to go for your master's, if you're just an average worker, whatever it is that you do, or you're a businessman or woman, whatever it is you do, it's very essential that you actually hedge in the risk of FX by investing in this type of investments, right? But as regards to diaspora, the reason why this is very, it's easy for them to invest in this sort of instrument, given the fact that they actually have the FX readily available, especially in the form which is required via inflow. They can easily transfer this funds from their own location. So if you're in diaspora, you can easily always bring in this fund. And something very essential that I also need to note is that people might have concerns as regards, are you then going to convert my dollar to Naira, you know, at the point of liquidation or me making a redemption? That's not going to happen, right? So if you're in diaspora and you want to get your funds back, we would simply transfer it to your designated bank, be it in the US. We have customers across the globe. We have US, we have people in the UAE, the UK, you know, even Asia, across the world, right? So regardless of where you are, we can move the funds to you in the same currency to which you bought it, which is dollars, essentially. So it cuts across everyone's needs, the diaspora, and essentially also the local investors as well.
Okay. All right. Thank you. Thank you very much, Ore. So now we know that the Eurobond, United Capital Eurobond, is open to every and anybody. Thank you. So, Ore, this question also goes to you as well. Sorry, I'll soon come to you, Ayo, but these questions are sort of stacked up for Ore at the moment. So how does one switch? For instance, I have some investments in Naira and I want to switch to dollar. I mean, you said you don't collect cash. So is it possible? How do I switch from a Naira investment to a dollar-denominated investment? How easy? I mean, it sounds easy, but you know, in Nigeria, things are so complicated all the time. If you can just help us with that.
Right. So I think to clarify, you know, this is going to be two ways. So we have existing customers, existing investors, and of course, prospective investors. So it'll be different channels for the two segments. So if you're an existing investor of United Capital looking to switch some of your existing investments, of course, liaising with your relationship manager or reaching us through any of the channels will be able to adequately direct you on the process. So it's just basically you switching from one form to another. However, I think the most important thing is really at what rate, at what pricing would that occur, right? How that works basically is on the prevailing market price at that point in time. And we also have to, you know, liaise with various counterparties that help with this process to ensure it's very seamless. So it's something that we would have to discuss on a one-on-one basis to ensure that you're okay with the terms and conditions for such a swap, right? So if you're looking to swap from one investment to another, you have to be okay with the terms and conditions, first of all, and also included in those terms and conditions is the price for the swap. So as long as you're okay with the terms and conditions, would help you with that process. It might take a few days, a couple of days here and there, but it's something that we can help you sort out internally if you're an existing customer. But if you're a prospective investor, of course, what I mentioned earlier would still reoccur. You would have to go through the KYC process, which is, you know, open an account with us in the first place. Then we'll also then guide you on the various terms and conditions for the swap. So we'll definitely inform you on what the going rate is, and if there's any other additional required documents or anything that you might need to provide, we would advise you, then we'll help you with that swap. So it's pretty much, it's not something that, you know, it's just blanket. It's a one-on-one engagement because it depends on the time you're doing it. It may also depend on the volume you're doing. You know, there's so many factors. If there's availability at that point in time, you know, there's so many factors that go into this whole process. But we'll encourage you to engage with us via our various platforms and channels to ensure that we have that one-on-one engagement with you so that we can guide you through that process. I think towards the end of the webinar, we would share contact information with myself and of course the general information as well, so that you can reach out to us so that we can guide you through this step, you know, on a one-on-one basis.
Thank you for that, Ore. And so this last question goes to you as well, Ore. Is there any other provision that United Capital has for people in diaspora apart from the Eurobond? Is there any other fund that exists?
I mean, so the main essence is to say you want to have FX or dollar-denominated investments. So the number one vehicle we have at United Capital is our Eurobond mutual fund. However, if you're someone that is looking to purchase directly into the market, you have let's say about 200,000 USD. You're looking to buy across various markets in Africa, be it Ghana, anywhere, Cote d'Ivoire, anywhere you're looking to buy any of those Euro bonds, we can help you facilitate those transactions. So if you're looking to go direct, of course, we would help you with the advisory services and also help you with the execution of that mandate, if that's something that interests you as an individual. But also, as regards to the diaspora, we also try to provide more of a specialized service in the sense that we understand the peculiarities of their investments. And I think the number one thing that they look out for is safety of the funds. And I think that's something United Capital has been able to do successfully, being one of the strongest asset managers and investment bankers, banking firms in Nigeria. We've been able to provide that comfort level for clients in the diaspora by giving them a one-on-one touch to be able to understand and navigate the difficult terrains of investing in Nigeria. So since we've been able to do that effectively over the last couple of years, and we'll just continue to give that type of service to the markets. And to further strengthen that is usually the one-on-one consultation, as I mentioned earlier. As soon as, towards the end of this webinar, we'll be able to provide all the required contact information so that we can engage with you one-on-one and understand the peculiarities of your own region, how you need to fund, and what exactly it is we need from you to be able to execute your mandates.
All right, thank you very much for that, Ore. So like I said, the questions are still coming in. We have about 50 odd questions. Please keep them coming. We'll address them as time goes by, at the end of the session. So Ayo, please, this is the final question that I'll be asking. Ayo, what are the additional benefits that one would get from investing in the Eurobond fund? Are there, I know you've talked about the interest rate, but what additional benefits would we get from investing in the fund?
Okay, thank you. So quickly, earlier I mentioned when I was talking, I said, the Eurobond fund or, Eurobond as an investment is one that is very liquid, such that if you need funds, you can easily sell. But at United Capital, we've created an option for our clients because we understand that, okay, yes, you've invested, and then at some point in time, maybe you have an emergency and you need to take care of, that emergency at that point in time. Rather than liquidating your investment in the Eurobond fund, we provide the opportunity for you to access a cash-backed loan, considering the fact that you already have an investment with us already. So rather than liquidating your investment, there's the option for you, to get a cash loan at, very affordable interest rates. So that's one of the major benefits that we also provide. So you have access to credit facilities as long as, your investments are with United Capital, particularly on the Eurobond fund. So we can easily always provide that in case, there are emergencies that come up, or, you have bills that you need to take care of. And, that now makes you want to liquidate your investments. We give you the option of saying, okay, rather than liquidate that investment, why not just take, a loan at a very affordable interest rate, considering you won't need to bring any maybe additional collateral or anything, considering the fact that you already have an existing investment with us. So that's another added benefit, to the interest rates, to the stability, and to the hedging benefits that you also get.
Oh, interesting. So you can actually help fund my investment needs. Are you there?
Sorry, yeah, we lost.
Okay, yeah, I just wanted to confirm that you can actually help fund my investment needs or appetites, or, based on the fact that I'm an existing United Capital investor. Yes,
considering the fact that you're an existing United Capital investor, we can always extend credit facilities.
Right.
We have else for that.
Okay, thank you very much, guys. This has been very educative, informative. I've learned so much myself. And so right now what we'll do is to delve straight into the questions that we have in our chat box. What I'll be doing, because like I said, we have over 50 questions, I'll merge the ones that are similar in nature Some of the ones that we have already answered, I'll just re-emphasize what was discussed and then we'll go to the next. So straight to the anonymous attendee. He or she asks that what's the easiest and cost-efficient way to fund my Eurobond account? So already you've talked about that, but I'd just like for you to just please, in the next minute or two, let this attendee know what the easiest and the most cost-efficient way to fund her account. So I think she has an existing account, but she wants to know how to fund it.
Right. Okay. If for an existing client or investor, there are a couple of things to consider, right? So, are you looking to convert Naira to dollar? That's one thing to consider. So, if you're in that category, as I said, a one-on-one consultation will let you understand what the T's and C's or the terms and conditions for that is, and what the going rate is at that point in time. That might be cost-effective. So, if you're someone that has Naira, I think the most cost-effective way is to do a swap. Right, that's the most cost-effective way to go around it. We would advise you strongly not to go and buy dollars in cash because you're trying to, reduce the cost of actually getting the inflow. Because once you have cash, you then cannot invest the cash, then becomes something you then have to keep the liability in your home or all that. So it's very essential that if you're a Naira investor looking to swap, that'll be the best alternative. However, if you're someone that already has FX in the form of inflow or transfer into your domiciliary account, be it here or your account abroad, then a transfer would be most efficient straight into our phone account, which is domiciled with the FCMB custodians, right? The FCMB. So you can easily just transfer that from anywhere you are into our phone account. So it depends on which category you fall in. And if you're someone that already has dollars in cash, then also that would require some one-on-one consultation to understand the peculiarity of where it is, what the volume, so we can advise you on the various channels to go around that.
Okay, thank you very much, Ore. Ayo, the next question goes to you, and this is from Oluwashino Akiremi. My question goes to Ayo. How will this policy, I believe he's talking about the new FX policy, how will this policy better the exchange rates? So if the CBN used to allocate roughly 100 million to the BDC on a monthly basis, and people still patronize the parallel market, is the CBN planning to raise the allocation to the commercial banks to say about 250 million in order to reduce the supply pressure, or what are your thoughts on that?
Okay, so basically, in terms of, we have to look at it because the CBN has a category, the way it categorizes FX demand, right? There is the legitimate FX demand according to the CBN's categorization. There are legitimate FX demands and there are illegitimate FX demands. Not that they are illegal activities, but those demands cannot access dollars from the official channels. For example, there are certain businesses, maybe if you import palm oil, you import ceramic items, you import textile, certain items that the CBN says you cannot get dollars from the banks. Why? Because we are trying to encourage local production, right? So we have to look at it from that perspective. So for legitimate FX demands, the problem before, like prior to now, when COVID happened, basically when there was a COVID outbreak, was that CBN stopped supplying dollars to anybody, because they wanted to protect, or try to preserve their external reserves, right? So most of these investors or these importers had to be going to the BDCs or the parallel markets to get dollars for them to import what they wanted to import. That's despite the fact that their FX demands are legitimate. But with the new policy now, CBN is saying no need to go to the BDCs, because with the BDCs, there's a bit of issue with their operations. What the BDCs were doing basically was, the CBN sells dollars to them at say maybe 420 every week, and then they have a pre-agreed margin with the CBN that, you should not be selling dollars beyond 430. But like we know, most BDCs, you go to them, you want to buy dollars, you are getting it at 500, 515, as of now. So the CBN is saying the dollars we're giving you, you're basically making excessive profits out of it, rather than, fulfilling the mandate of allowing FX supply to go around. So the CBN is saying, we take that FX from you and we take it to the banks. And then we'll tell the people who can legitimately access this FX to leave the parallel markets and go to the banks. Only people whose FX demands are classified as not legitimate. So for example, maybe you want to buy a clothes on Amazon, for example, or you want to buy something from an online store in the UK or something, beyond the provision your bank makes for you, any other provision above that, you typically need to source your dollars, yourself. For example, maybe you are using online platforms, payment platforms like maybe say Flutterwave, for example, that allow you to have virtual dollar cards and the likes. You still need to fund those kind of accounts, and for you to fund, it means you have to go to the private market to buy. But for legitimate FX demands, you can easily go to the banks. Now, would this be positive for exchange rates? It's still very much dependent on the ability of the CBN to supply dollars. That's the bottom line. That's the bottom line of everything. Would the CBN be able to continue to supply dollars to the banks? If the CBN can sustain it, then there will be no questions there will be no issues regarding exchange rates or FX supply. But if, for example, in another 2 or 3 months, God forbid, we now see oil prices begin to crash, and then oil production begins to reduce and things like that, it means that dollar inflows will be reduced and the CBN will become limited in being able to supply FX. So the bottom line is, can CBN continue to sustain the supply? Because last week, they supplied about $200 million to the banks. And mind you, CBN already sells dollars to the banks before. What it's only doing is it's taking the supply that goes to the BTCs in addition to what it already supplies to the banks, and has instructed banks that banks sell to people as long as they meet the documentation and their FX demands are legitimate. So in that sense, it is positive for people who have legitimate FX demands. But for people that don't have legitimate FX demands, then they still have to continue to deal at the parallel markets. And even at that, they don't need to worry, because even we still expect that, yes, exchange rate at parallel market may be high at this point in time, but at some point should simmer down to a variable level, for them to still be able to access dollars and all. But definitely, it will definitely not be as cheap as what you have when you buy from the banks. So it depends on what side of the bucket you fall in. Are you a legitimate FX demand user or illegitimate in the classification of the CBN?
Okay, thank you very much for that, Ayo. However, and this answers Akintola's question that says, what measures have been put in place to ensure that the banks don't abuse this policy? So we understand now, based on what you said, is that the CBN has moved the allocation of the BDC to the banks, also based on the on them benefiting excessively from that allocation. However, what do you think? What measures do you think are in place to ensure that the banks don't, and the banks and the bank officials don't exploit this allocation that is being given to them? Because now they're the only source of dollars in the country. So what do you think are measures that have been put in place to ensure that they don't misuse this opportunity?
Okay, so short and simple, the CBN has created a whistleblowing line. So if you go to the CBN's website, there are about two numbers that you can call, and then there's an email. There's a portal where you can lodge any complaint about any bank that refuses to supply you FX, as despite the fact that you meet the requirements. Or maybe you go to the bank, you ask for $2,000, and then they are telling you we can only give you $1,000. They are rationing FX. So the CBN is saying, report them to us and we will deal with them. So that's the measure the CBN has put in place. Because totally, Akinloye's question is very valid in the sense that banks tend to always exploit this opportunity. CBN gives them dollars at 410 or so, and then they take it and move to the parallel market or something like that, or basically sell at exorbitant rates and create an artificial scarcity for the dollar, whereas the CBN is supplying them dollars. But the CBN is saying, if any bank refuses to give you FX or rations FX to you, report them to us and we'll deal with them.
Right, thank you for that, Ayo. Ore, I'd like you to help with this question, and it goes, this is from Adenekan. He says, are the returns on the dollar-denominated investment guaranteed, and what are the available investments? And this also answers Abdul Ozoya's question that says you should give the different types of dollar-denominated investments. So first of all, are the returns on the dollar-denominated investment guaranteed, and also what other types of dollar-denominated investments are available?
Thank you very much. So the return is not guaranteed. The returns across the mutual fund space are not guaranteed. They do fluctuate from time to time. However, they're rather pretty stable. And with a fund like the Eurobond fund, I think what's essential is that you have capital preservation. And what capital preservation means is that if you invested $1,000, you're sure that your $1,000 is going to be $1,000. Your only concern then becomes how much interest do I get on top of that? So it's plus X. How much interest do you keep getting on top of your existing investment, which I said currently is returning about 7.5% annualized. So it might fluctuate from time to time, but within a spectrum, you should be expecting returns, let's say between 4 and let's say about 8% there, about 9% thereabouts within that spectrum. And the most essential thing is that your returns never go negative and your capital is preserved. However, the returns may fluctuate from time to time. And as regards, the type of dollar-denominated investments that we have at United Capital, I mean, the main one, as I mentioned, is the Eurobond fund. However, if you fall within the category of clients that want to buy or purchase directly, an Eurobond in the market, and you have a minimum of about $200,000, then you can go directly into the Eurobond market and buy these instruments yourself, right? We would help with the brokerage, we would help, with the advisory service as regards that as well. However, the main product would remain our Eurobond fund, which allows every class of investor. As Ayo mentioned earlier, it ticks every bucket for every investor. If you're an institutional investor, if you're a high net worth individual, if you're a retail investor, wherever it is you are, this fund is for everyone, and your capital is preserved.
Okay, thank you so much. So our capital is preserved, right? Wale wants to know his question goes, with the US printing trillions of dollars to support their stimulus programs, should I be worried about the dollar-denominated inflation? If so, how do I protect my dollar investments? And I think this should go to Ayo, if you can help with that question.
Okay, thank you. So quickly, in terms of truly in the US, inflation, has been on the rise. As a last printed inflation number was about 5.4%, right? Which is quite high when you look at the target inflation range for the US basically, and looking at historical levels. But largely, sound bites from their policymakers has been the fact that most of the inflationary pressures they are seeing are very much transient, in the sense that they are temporary. That is, like, they don't expect it to last for long, because it's just a knock-on effect of the economic reopening, and then we are seeing that overheating. But even in the case where this inflation becomes a prolonged story, what that implies is the US Fed will most likely have to increase interest rates, right? Which means when they increase interest rates, it directly means interest rate on Eurobond investments would most likely also go up. Because when the US Fed increases interest rates, it means interest rates on dollar assets would increase. So if anything, it's even a sort of a positive light, because it's in a positive light because their markets are much more efficient. I would just give a perspective to that. In Nigeria, for example, we have negative real interest rates right now because inflation is like about 17.75%, whereas Naira assets, you are getting 10%. 1 year treasury bill is doing about 8% roughly. So in the real sense of things, your real interest rate is negative. But in the US market, so even when they increase interest rates in Nigeria, sometimes it does not necessarily, close that gap of that negative return. So the market is not so efficient. But when you go to the US market, if the Federal Reserve decides to maybe increase, what you notice is, all interest rates on dollar-denominated assets will also go up. So in a way, it's even positive. If you are invested in the Eurobond fund, our asset managers keep track of all these things. So once the US Fed increases interest rates and interest on dollar-denominated assets increase, it means they are able to buy more Eurobonds at higher interest rates, which means the fund is able to return even higher returns for all the investors. So if anything, it's even something that is positive for you as a Nigerian investor, that, if from an investment perspective, if US inflation goes higher and their policymakers decide to increase their interest rates, then your interest rates that you're earning on a dollar-denominated asset, would also increase. So that is something that's even positive in a return on investment perspective for you as a Nigerian investor.
Right. Thank you. Thank you for that. So I'll just chip in here that for those of us who have questions about our personal portfolios, details of contact or go-to persons will be listed out. So you can just contact us, because I see some questions that are specific to persons. So I'll just keep those questions, and then I'll go to the ones that are more general or generic in nature. Ayo, please help with this question. Kindly recommend, and this question is from Joseph Ubaja, kindly recommend the dollar investment with the best yield. And also, what is the difference between a dollar-denominated Eurobond and a dollar mutual fund?
Okay, so I would start from the last question. So the difference between a dollar mutual fund and dollar-denominated Eurobond. Eurobonds basically they are like debt instruments. So it's like maybe a government or a company borrowing in dollars, right? So they issue an Eurobond, and then they tell you, we'll pay you an interest every year, and we'll return your capital to you. And typically, even for some Eurobonds, for most Eurobonds, interest is actually paid semi-annually, and then they would also pay your capital at the end of the period, right? So that's the Eurobond itself, is the security itself. But the mutual fund, the Eurobond mutual fund itself, is a fund that's like, because for you to invest in Eurobonds, you need a minimum of $200,000 to invest into buying Eurobonds from the market directly, right? But we know that there are investors who have $1,000, who have $2,000, and they also want to get this benefit, because typically as a Nigerian, you have a limited amount of dollar-denominated assets you can invest in. There are not so many. Once you take out the Eurobonds and the Eurobond funds, there's basically little or nothing left, except you want to go to the US to go and invest maybe in US bonds or something, which will require very high capital, and the return is not very impressive. And maybe an alternative is maybe investing in dollar equities also. But again, dollar equities comes with its own risk. Unlike Eurobonds, where you have guaranteed interest rate, or your capital, not guaranteed interest rate, sorry, where your capital is preserved. And then, you know that the only thing is you will get additional interest. Unlike investing in dollar equities where it can go up and come down. So basically that capital preservation is not there, right? So most people want to invest, but they don't have that alternative. So what we have done is, since we know that we have investors that don't have $200,000 to invest in Eurobonds, we decide that, okay, let us create a mutual fund, right? And we say, if you have $1,000, don't worry, invest in the mutual fund. If you have $2,000, invest in the mutual fund. The mutual funds now is like aggregating funds from people, and then you go to buy Eurobonds, right? So rather than you going to the market directly to buy Eurobonds, we say, because you don't meet the minimum requirements, bring your $1,000, invest in the funds, and then we would go to the market, aggregate. So if 200 people bring $1,000, right? We aggregate the funds and we go to the market to buy Eurobonds, and then everybody own a unit in that mutual fund. So you have ownership of units in the mutual fund. So that's the difference. Both of them are tied to Eurobonds, but one is minimum of $200,000 and you go directly to the market. But one, you can invest $1,000, you can invest $2,000. So basically one is more retail, the other is much more, wholesale, kind of type. Then the last thing was on kindly recommend dollar investment with the best yield. So I will list all the dollar opportunities you have as an investor in Nigeria. One which people mostly do is leave their dollars in their domiciliary accounts. But the interest rate on that is absolutely nothing. You can basically call it nothing. Really, you probably get less than 0.1%, or because it's absolutely very, very low. That's investing, leaving your dollars in your domiciliary account. Second alternative is you can invest in dollar equities. This is as a Nigerian investor, you can invest in dollar equities. But like I mentioned, dollar equities don't give you capital preservation. So if you are someone that you are worried about risk, then there's a very huge possibility for you. If you invest $1,000, you may not necessarily get $1,000. You may end up getting maybe $700 if the equities you invest in should not perform. The third one is, you can invest in Eurobonds. But again, investing in Eurobonds is very limited. It's to restrict to a limited class of people, because you must have at least $200,000. So that again excludes certain people, right? What other alternative do you have? The mutual fund, which is what we are proposing to people that, oh, if you have $1,000, $2,000, you want capital preservation, you want to hedge against exchange rate risk, you want to also get a decent return above what you get on your domiciliary account, then the mutual fund is for you. Basically, it preserves your capital, because what in keeping your dollars in your domiciliary account, you get capital preservation, right? The mutual fund gives you capital preservation. On the advantage of the mutual fund to domiciliary accounts is it gives you interest rates higher than that, right? So you are getting higher interest rates compared to what you get on your domiciliary account. Dollar securities are much more risky. The mutual fund is, much more, it gives you that capital preservation that you need. Euro bonds, directly buying Euro bonds, it excludes retail investors. The mutual fund allows retail investors and anybody. So the mutual fund basically aggregates all the benefits you can get from every form of dollar investment, and it aggregates into one and offers you that. So for us, we think the Eurobond mutual fund would be the best option in terms of a risk to return perspective. So if you are now a more aggressive investor, or you meet maybe the minimum requirement to invest in Eurobonds, then we also provide you the option of buying Eurobonds on your behalf. So that's basically on that. Thank you.
Okay, so we see that the mutual fund has lots of benefits. Like you said, it aggregates all the benefits of different investment portfolios or buckets. But Unstoppable T and Olalere Babashala want to know if there are any risks at all involved in investing in the United Capital Eurobond Fund. Are there any risks associated with the fund?
Right. For the Eurobond fund, like with any other investment, there are risks, involved in making investments altogether. However, on the Eurobond fund, I think we would classify it as a low risk investment, which means the kind of risk you're exposed to are quite limited. The risk in a low risk investment are risks that will cut across board altogether. For example, if a country ceases to exist, natural disasters, those type of events that do take place are unexpected, are the type of risk that you would typically associate with low risk type of investment, as opposed to the high risk investment we have to do with the instruments that are rather high risk. Then also another thing to really consider is the underlying instruments to which we invest. The underlying instruments are Eurobonds, which in itself have the full faith of the Nigerian government to ensure that they meet up to the obligations to pay as at when due. So it's really more of a low risk type of investment. So for investors that are considering this type of funds, they have little to really worry about. Just things that typically would affect anything that you do to your day-to-day life, right? Like natural disasters and those type of things that you would consider in this type of low risk type of investment.
Right. Thank you very much. And just addressing Hetty's question, it says minimum Naira or dollar required to invest. Ori, I know you've mentioned that, but if you can just, for the benefit of those who joined late, let us know what the minimum investment amount is and the minimum duration. Right.
The minimum investment is $1,000, both in Naira terms and dollar terms. So it really depends if you're someone that has Naira. So it depends on what the going rate at that point in time to ensure that you're coming in with the minimum $1,000. After which, once you've met the minimum threshold, subsequently, you can always add in multiples of $500. So that means you could scale up to $500, another 1,000, another 1.5. In those type of multiples, you could always scale up your investment over time. So that's and then also the minimum duration is 90 days. The minimum duration on the investment is 90 days. And what that typically means for you is that we'll expect you to keep the funds with us for that minimum period before you start making withdrawals or redemption on the investments which you have made.
Okay, so if I need the funds before the expiration of the 90-day period, is that possible?
Yes, you can get the funds before the 90 days. It's a very liquid fund. So if you need the fund for any circumstance or anything, and you need to withdraw within 30 days, 60 days, at any point in time, yes, you can take your funds out. Although there's a slight penal charge on it, which is about 0.25% of the interest and not your principal. right? And by the time you compute what 0.25% or whatever it is it's always quite very little compared to what you actually stand to benefit. So yes, it's very liquid and readily available to you at any point in time that you need the funds.
All right, thank you, Ore. Moving on very quickly, Joke wants to know, Ore, please answer this question. Joke Pearl wants to know, in the event of the demise of an investor, how is the Eurobond fund protected? And then is it transferable? So if you can just help us with that question.
Right, thank you. Good. That's a very good question. Yes, the investment is transferable. It's an investment that would continue to exist in perpetuity, which means it will continue to run, its life course, and can be moved from one generation to another generation, which I think is a very essential benefit of making this type of investment. So as regards passing on to the beneficiary, what's most important, when you fill the form, you put your next of kin. That's just the first layer. The first layer is to ensure that we have the required contact to inform them that you do have this investment. Once we've not heard from you after a duration of time, we'll ensure that we keep tabs on our clients on a quarterly basis to ensure we see on the how they're doing, send them information and whatnot. After a duration of time, and we see we can't reach a certain customer, we will then reach out to the next of kin to find out how the existing investor is doing and the whereabouts. Once that is established, then we'll be able to advise on what the next step is. Usually you would have to go through a legal process to acquire those assets if it's not already listed in an existing will or some sort of private trust or what sort of arrangement, a legal documented arrangement, to be able to pass on the assets to the next generation. However, we would be in touch with the next of kin to put them through the necessary process to ensure that it's done appropriately. But if you want to move it to the next level, to ensure that you want to preserve your investment, you want that process to be seamless, wherever you want it listed in a will or you want to create a will and whatnot, then we'll be able to introduce you to our trustee business, which can help you with this process of creating and drafting a will to ensure that all your assets, not just in your Eurobond fund, all assets that you might have that you want to include and pass on to the next generation would then be drafted and included. So as we said, United Capital is an all-inclusive business. So we can, provide, every need you have. It's your trustee need or your asset management need. We're all working hand in hand to ensure that, all this is done in one full solution.
All right, thank you very much. But before you go, Chima Ejimako wants to know what the management, or if at all there are any management fees or commissions for the fund.
Yes, there are management fees on the fund, which are pretty regulated by SEC, which is our regulator. However, the returns that we quoted are net of all fees. So the current return on the fund is about 7.5%, which is net of all fees on the fund, all the expenses and all that. But typically, the management fee on this type of fund is about 1% of the assets managed, not just yours, on the total assets which is managed.
Right. So I know you've mentioned this as well, and I'll just repeat for the benefit of those who just joined. This session is being recorded on YouTube, so you can actually go to YouTube and search with United Capital PLC, and this will come up, so you can always refer to some of the things that have been discussed here. So how can you throw some light on the Prestige Fund? Someone wants to know, this is Joseph, I believe, wants to know what the United Capital Prestige Fund is, as he understands that it offers up to 8% returns. So can you speak to that?
Right, thank you for that, Gbemi. So for the Prestige Fund, yes, one of the offerings we do have at United Capital within our wealth management division, which is more targeted to the high net worth individuals. The essence of the session is to make sure that we cut across all the buckets, as Ayo said, to ensure that every investor can be able to invest with us. It's more of a high-end product. If you do have sizable volume, you want to invest in the dollar space, we do have some other diverse investments, typically for high net worth individuals, where we're talking about doing about $1 million and above, whereby you'll be able to invest in those type instruments. So yes, we do provide that. If it's something that interests you and you fall into that category, please feel free to reach out to us, and we'll be able to put you through that as well.
Right. All right. And this goes to you as well. AJ wants to know, I believe this is when you were talking about liquidation and the impact on the interest. He wants to know if you can explain clearly what you mean by the capital is guaranteed, but the interest is not guaranteed on the mutual fund.
Right. So when we say the capital is preserved, right? The capital being preserved means that, you know, whatever it is that you invested, you're sure to get that. So I use the example of $1,000. If you invest $1,000 with us, your funds would still remain 1,000. You're sure about that. However, the returns that you would get on top of it over the duration would fluctuate, right? So the returns we get on so let me give you a practical example. The funds do fluctuate on a daily basis. Currently, it's returning about 7.5% as of today. So if you're an investor in the fund and you had about $1,000, you'll be getting 7.5% annualized of that as of today. And that's booked for you already. That's good to go. The next business day or the next day, you would also see what the return is. If it still remains at 7.5, you would get that same value of interest the next day. However, the next day, it might change to, let's say, somewhere within windows of, let's say, 8%. Then what you'll be getting effectively on that day is 8% of that your $1,000 annualized, which is also going to be booked down for you. And the process continues to perpetuity, right? So the returns might fluctuate from day to day. However, the capital is preserved. The returns too, you're also going to get something every single day. However, what you're getting may change from time to time, but it's rather very stable. So I'll give you an example. Over the last 4 years, the return has averaged, the fund has averaged at least an annual average of about over 7% as regards to returns it provides to investors in the fund. So you should be expecting something within that region, given the track record of what we've given. However, it might change from time to time.
Right. So, Ora, you mentioned the Invest Now app. Can you just let our viewers know exactly how is it? Do they just go to the either Apple or Play Store and download the app? What happens? Do they need any form of documentation? A couple of people have asked about the types of documentation that they would need to open accounts.
Right. So yes, Invest Now can be downloaded from any of the app stores, the iStore, the Google Play Store as well. So you would search for Invest Now. As soon as you locate it, you will download it. After which you will be able to view various products and services that we do offer. Then you would select the Eurobond fund. After which you'll be required to fill out an account opening KYC documents, which will basically be things like your name, where you work, how old you are, what you do, and also where you reside as well, so that we have the essential information to be able to know who you are and who is doing business with us. And I also saw in the chat room as well a question as regards if you're in diaspora, can you put a foreign address? Yes, you can. You can put a foreign address. All you would need to support that is evidence, to show where you live. It could be any sort of utility bill. It could be for gas, water, electricity, all those type of bills that reflect the address that you have. And also, it also needs to be recent. So it has to be within the last 3 months. Any of the bills you paid within the last 3 months. And this is also the same for local investors. It could be your LOMA, it could be your electricity, any of those bills would suffice in this situation. Then a valid means of ID would be your NIN, your driver's license, your international passport. All those will suffice for the essence of opening your account. Then also we'll need a passport photograph of yourself, like a selfie will suffice in most situations for the app, or you could just upload any picture you have to close out on the account opening. Also, another interesting thing about Invest Now is once you conclude that process, then you can now initiate, activating your investment. So if you also do Naira-based investments, you can activate that as well and begin to, fund online. However, if you're doing a dollar-based investment like the Eurobond fund, then you will have to fund through alternative channels, like doing a direct bank transfer to the fund account. So once your account is open, we also send you an email with the banking details that you need to do the transfer to. Then also we provide the one-on-one consultation to ensure we can put you through that process if you have any challenges along the way. And once that process is concluded and your investment is active, then Invest Now becomes a tool to actively track your investment. You'll be able to see the kind of returns you're getting on a day-to-day basis, see how the performance has been, as well as also being able to make liquidations or withdrawals on your investment. So if you wanted to make a drawdown from your investment, you just simply select withdrawal, put how much you want to take, and that process is done. So I think the InvestNow tool is not just an account opening tool, it's also one that's going to help you with your investment journey as a whole.
Okay, thank you very much, Ore. Thank you. So we'll be rounding up in the next 7 minutes, but I'll just try and see if we can take as many questions as possible. Ayorinde, these questions are for you, 2-in-1 combo. From AS395QN, he wants to know more, he's more interested in the cash-back loans. So he wants to know what's the assurance that the interest rate on the loans and the repayment terms will not be higher than whatever value or interest he gets from the foreign denominated investment. That's 1. 2, Olalere Babashola wants to know who the promoters of United Capital PLC are and how he can be sure that we won't go away, we won't go the way of many failed financial companies with people's monies with them. So if you can just answer those 2 questions, please.
Okay, quickly. First, to the first question on the interest for the cash now loans. Basically, it's the interest rates are set by we have that channel is from our consumer finance business, right? And the interest rates are very much affordable, very compared to what obtains, other with other credit institutions. Basically, they are very much affordable. And then we also look at it from the perspective of if you're for example, if you're invested in a dollar-denominated instrument and you are borrowing in Naira denominated you are borrowing in Naira terms, basically Naira denominated loan. I mean, when you compare the two, the interest you pay on the Naira loan would not be compared to whatever return you would be getting definitely as a dollar investor. So that's also another perspective to look at it. But what we can assure you is the interest rates on our cash now loans are very much attractive. And what if you want to access that, you can easily reach out to us. We provide, definitely, like being mentioned earlier, we'll provide contact details for you to reach anyone in United Capital, email addresses and all, and then you can easily reach out for you to be able to begin that process. Then I think the other question was related to United Capital, what promoters of United Capital. So just a bit of history, right? United Capital was like a division in UBA before now, but because of CBN regulations and things that came up later, banks were either required to to spin off every other business that does not relate to commercial banking. So United Capital had to come out from UBA as a stand-alone company, basically. So you can be rest assured, United Capital is part of a very broad group. Now that's the Ace Holdings group. And United Capital is one of the companies under that group. So we have so many other businesses within that space. We have businesses in power. That's our Transcorp power business. In the hotel business, we have Transcorp hotels. So we have lots of businesses that cuts across all the different sectors in Nigeria. United Capital is the financial services company under the group, basically. Now, in terms, so that's speaking to the promoters of the company. Now, in terms of security of your investments or your funds with United Capital is SEC regulated. Number one, our asset management business is also a member of the Fund Managers Association of Nigeria. So you can be rest assured that in terms of regulations, we have regulatory oversight over all the activities we do at United Capital. And then number two, most of these investments are not, they are not carried as United Capital. They are custodians that hold these investments, that hold these investments in protection for clients. So when you invest, for example, in a mutual fund, for example, with United Capital, the mutual fund, is domiciled with a custodian firm. And the custodian firm, basically protects your interest as an investor. So even in a situation whereby, which we know that we are very sure that, if you look at our numbers, for example, that United Capital is a business that is growing very fast. But even in a situation whereby anything happens, your investments are protected and you have access to get your funds and your investments, at any point in time. So you can be rest assured that your funds are secure, that United Capital is not going to go anywhere with your funds. There's enough regulation in place, and the reputation of the firm goes far in terms of the group that we are under in terms of our brand, in terms of our position. You know, we are the second biggest fund manager in Nigeria. We stand for something. We have a reputation to protect, and you know, we have a reputation of the financial services industry to also protect, because we're a major stakeholder, being the second biggest fund manager in Nigeria. So you can be rest assured that you're definitely dealing, you know, with with the best of the best, basically. So you can be rest assured. Thank you.
All right, thank you so much, Ayorinde. Unfortunately, we won't be taking any more questions, even though I'm tempted to mention the comment from Olalere Babashola, which says that he's asking if we have an official haircut in United Capital. I found that funny. No, we do not have an official haircut. This is probably just a coincidence. So thank you so much. Ore, thank you very much, Ayorinde. Thank you so much for all the attendees. Thank you for listening. Thank you for attending. We'll be rounding up on this masterclass. Thank you so much for joining. I just need to put it out there that United Capital is a listed company on the Nigerian Stock Exchange. It is a PLC. It's not a money doubler. You know, we have so many unscrupulous people out there who want to prey on unknowing investors. We don't double money in days. We don't do that. We go strictly by our regulators and regulations that have been put in place. As I had mentioned, this session will be on YouTube. You can always search. We have a lot more other topics, other sessions that border around the issue or the area of investment and how we can leverage on different investment instruments and opportunities that are available. You can also reach us on Instagram at United Capital PLC, one word, and also on Facebook at United Capital PLC. For now, we're not on Twitter, or we're not operating on Twitter. So once again, I'd like to thank everyone for joining, and we look forward to hearing from you. For people who have left questions about that haven't been answered, we'll try as much as possible to reach out to everyone so we can answer all your questions. Thank you so much, and bye for now.